The US banking giant PNC has just teamed up with Coinbase to launch crypto as a service for its customers, a move that's big news for traditional finance. Here's why it matters. PNC isn't just dipping a toe in the water, they're fully integrating secure, streamlined digital asset services into their platform, allowing clients to buy, hold, and sell crypto without leaving the bank they trust. This partnership gives PNC instant access to Coinbase's advanced back-end custody, compliance, trading, all powerfully packaged. No need to build from scratch. And Coinbase gets banking support from a super-regional bank with roughly $400 billion in deposits, a huge vote of confidence from traditional finance. PNC CEO Bill Demchik said it accelerates their ability to meet surging customer demand. This also reflects the broader trend. Bigger players from JP Morgan with crypto-backed loans to Standard Chartered offering direct spot trading are embracing digital assets. Impact. This is groundbreaking for institutional trust. When a regulated U.S. bank adds crypto access via Coinbase, it signals to corporate and retail clients that crypto is becoming a mainstream service, not a fringe experiment. It also shows regulators that banking and crypto can be safely intertwined. For your audience, this is proof the sector's infrastructure is scaling fast and that real money is moving in through legitimate channels. This could be the tipping point. Many banks have flirted with crypto in concept, but PNC is acting. Expect more follow-ups, perhaps even white-label banking products built on Coinbase tech. For investors, this validates the long-term thesis. Crypto's future lies in integration, not isolation. And for you, crypto enthusiasts, it means easier access and reduced friction. Keep an eye on how regulators respond. This deal went through amid Trump-era stability and fresh legislation on stablecoins and ETFs. Now let's talk Bitcoin ETFs. After an incredible 12-day inflow streak totaling over $6 billion in fresh capital, the tide turned on Monday. Spot BTC ETFs recorded a $131 million outflow. Big names were trimming positions. ARK Invest's ARK saw $77 million withdrawn. Grayscale's GBTC shed $36 million. And even Fidelity and Bitwise had modest outflows. Context and impacts. Bitcoin's price climbed into the high 120,000s following rumors of Trump's endorsement for crypto and halting speculation, but it's now consolidating around $118,000 to $119,000. The outflows appear to be profit-taking rather than a panic dump. Vincent Liu from Kronos Research noted it's a natural pause. Smart investors rebalancing their portfolios near historic highs. Meanwhile, Ethereum-based spot ETFs are still going strong. They saw another $296 million inflow on the same day, marking their own short-term record of interest. That suggests investors are rotating into Ethereum, viewing it as the next wave after Bitcoin's rally. This rotation highlights a maturing market psychology. Bitcoin led the charge. Now, it's Ethereum's turn to shine. For your viewers, this suggests watching both asset flows, not just price action. Tracking ETF movement gives early insight into where institutional money is heading. If Ether continues to outperform BTC and flows, we could see a sustained altcoin season. Rounding out today's market story, XRP and Ether's technical signals are flashing. XRP hit an all-time high intraday around 364, but then formed a classic bearish double top pattern, raising caution flags. On the flip side, Ether printed a daily Doji candle after a sharp rally from $2,100 to $3,800, a pattern indicating market hesitation. XRP surge has cleared 6 years of resistance and even broken a symmetrical triangle, key technical milestones that can lead to profit-taking or pullbacks. Ether's Doji signals that bulls and bears are evenly matched after a lightning-fast rally. When a double top hits after a new high, we often see a retracement toward the neckline, so XRP could dip back to 343.50. And Ether, if bulls lose control, we might see a cooldown below 3,800. but both are still in solid bullish territory if they hold above key supports. For viewers, this is prime swing trade setup territory. Watch volume, support lines, and whether XRP stays above its recent breakout. To wrap up, we've got three major developments. First, PNC's Coinbase integration marks a structural leap in crypto banking. Then, institutional flows show Bitcoin cooling and Ethereum heating up. And finally, XRP and Ether's charts warn of possible short-term corrections while remaining strong in the bigger picture. Here's a question for you. Are we watching crypto go mainstream, or is this just a hype cycle? And when it comes to flows and charts, are you rotating into Ether or betting on an XRP pullback? Let us know your take in the comments. Did these updates reshape your view on crypto's future? Drop your thoughts below. If you found this breakdown valuable, hit like, subscribe, and ring the bell so you don't miss our next deep dives. Until next time, stay curious and stay ahead.